And then, as Sonia had alerted you, we want to dwell a little more on the mid-cap IT stocks, which have seen a huge rally. First, let me invite Reema to tell us why we have put mid-cap IT on the table today. Reema, tell us.
Hi, good morning. So yesterday we had a sharp rally in many of these mid-cap names, likes of Tata Elxsi, Happiest Minds, Persistent, eClerx. That will come up for you on your screen. And if you would notice, these are the stocks which have had momentum backing them. They've had an exceedingly strong year. Happiest Minds is up 200% this year itself. Names like eClerx, Tata Elxsi are up 330% in the last 1 year. There is no one broad reason why these stocks are up. Of course, the fundamentals have improved. It's expected to be a strong quarter this time as they report their numbers. But just drilling it down to individual names, eClerx is trading cheaper than peers because the turnaround just started for eClerx, or the expected turnaround. For Persistent Systems, it's had some very strong quarters behind it, and even this quarter the street is expecting a 7 to 8% revenue growth. Tata Elxsi has also been reporting very strong numbers in a challenging year. They ended FY21 with a revenue growth of 13.5%, and Happiest Minds, as we know, is a pure play digital company. But if you notice the moves in the last few months, street is clearly backing some of these smaller IT names. So the bigger ones in the mid-cap pack, the likes of Mindtree, L&T Infotech, L&T Technology, are trailing some of these names like Tata Elxsi in terms of their pure play gains. So L&T Infotech and L&T Technology are just up 11 and 24% so far this year itself. As I wrap up this, I want to leave the valuations of some of these big movers up for you on your screen. The caveat is that these are not very well tracked, so these are analyst estimates of at best 1 or 2. Analysts expect EPS expectations of 1 to 2, but it would give you a broad idea that post the run-up, how expensive they've become. Back to you.
Okay, thank you very much for that. So that's the kind of numbers and the valuations that they are trading at. So let's get the expert in. Sudhir Guntupalli, the lead analyst of technology sector at ICICI Securities, is joined in as promised. Sudhir, good morning. Thank you very much. Well, I'm not going to start with the big boys like Reema has put on her radar. It's the mid caps we want to start with. Do you think that there is more comfort over there because the big boys well analyzed and have run up enough? Would you prefer the mid caps over the big ones?
Sure. Thanks, Lata. Good morning. Thanks for having me here. First, let me start off with a caveat that some of the names, without actually getting into names, some of the names that you have flashed over there, we don't actually have formal coverage. But if you look at the broader mid-cap space, right, yes, the valuations look pretty overheated. If I were to give you a sense, if you look at the market cap weighted average PE multiple of the mid-cap universe, IT mid-cap universe, and you benchmark it against Nifty IT. So currently the mid-cap universe might be trading at almost around 20-25% sort of a premium to the overall Nifty IT. And if you look at the last 15 to 20 year data, perhaps this happened only once and it did not sustain for a very long period of time. I mean, it looks at the outset, it looks that the valuations of many of these mid-cap names are pretty much in the overheated zone. Of course, I do acknowledge the point that some of these companies had seen a very good turnaround in the new paradigms of, let's say, most of the companies had new managements, most of the companies had a new set of promoters, financial investors rather than the erstwhile strategic promoters. So all those changes happened, and as Reema was highlighting in her initial remarks, some of these companies had seen pretty good turnaround. The likes of, let us say, Hexaware, to start off with Hexaware back in 2013, 2014, to all the way till Mindtree and Persistent in the recent past. And probably Cyient is something which is a kind of a work in progress in terms of that turnaround. So that point well taken, that most of these companies under the new managements and promoters have seen very good turnaround, and that has led to a sharp acceleration in terms of their growth rates. So just to give you an example, let us say the large cap IT names are delivering a growth in the range of 7 to 9% in steady state. Probably the mid-cap companies are delivering growth in the range of 13 to 14%. So the differential in terms of growth between large caps and mid-caps has widened over the last previous few years. So that justifies some sort of a re-rating. But overall, if you look at the mid-cap universe at this juncture, there is also another extrapolation bias that the market is going through, which is leading to this sort of premium in the mid-cap valuations versus the broader Nifty IT valuations. And what is that extrapolation bias? probably market is kind of extrapolating the latest quarter growth rates and margins to the next, let's say, 5 to 10 years, which I think, in my view, in our house view, is not very sustainable. One fact you should note here is that COVID has impacted different companies in different ways. The impact is pretty asymmetric and heterogeneous across companies. So some companies had seen transient tailwinds in terms of margins. But what market seems to be extrapolating is the latest quarter margins to the next 5 years or to the next 10 years in the steady state. I think that is also leading to some sort of a bias in the way market is looking at these names.
Sudhir,
but I do agree that
Sudhir,
there might
one
be some
minute.
impending correction.
Sudhir, 1 minute. You know, the market has not pulled out this extrapolation out of a hat. When did the market start? According to me, I thought the market started extrapolating after that big Rajesh Gopinathan statement after the second quarter last year, that we are standing at the start of a multi-year growth cycle. He was in no uncertain terms signaling that the rush of orders will continue. And they did continue. You know, Q3, Q4, we saw I remember even Mr. Vijay Kumar of HCL saying it is not a pipeline. The pipeline has burst. There are so many orders. So don't you think the extrapolation is somewhat justified?
Again, it depends on the company which we are talking about. Without getting into specifics of company names, so on and so forth. If you look at March quarter numbers, or if you look at latest Accenture's numbers, or the kind of previews that we are seeing for June quarter, what seems to be evident is these companies are kind of reverting. Most of the companies in the industry are kind of reverting to the pre-COVID average growth rates. So if you look at, if you remember, Lata, I do agree with you that September and December quarters have been pretty good for the IT sector. That's more of a recovery leg after the sharp dip we had seen in the June 20. But if you come to March 21 quarter, what you would have noticed is that most of the companies have kind of trended back or reverted to the pre-COVID long-term average growth rates. So for the industry, if you see, typical March quarter organic growth rates would be in the range of 2 to 3% or 2 to 2.5%, and you would have seen most of the companies reverting back to that levels. Same is the case with latest quarter, May quarter Accenture's numbers. On a sequential basis, if you see, the outsourcing segment would have reverted to 3 to 3.5% sort of growth rate, which is the historical average for Accenture even before COVID. So we'll have to see. I mean, again, without getting into specifics, without talking about any particular statement of any particular CXO, what I would like to say is it looks like, at least based on the incipient signs we are seeing from the March quarter, latest Accenture results, and probably we'll see that in this quarter also, is that the growth rates are reverting back to the pre-COVID long-term averages. And in that context, I would say too much of an extrapolation in the case of some mid-cap names is kind of unwarranted at this juncture.
Okay, so Sudhir, what are your preferred picks in this space then?
So across the mid-cap spectrum, we prefer L&T Infotech and we prefer Cyient. So L&T Infotech, I do agree that the multiples are pretty much in line with, let's say, the industry leader TCS. But L&T Infotech, one thing you should note is the return ratios are pretty much in line with TCS. And if you see the last 5-year growth rates, again, I'm not going by extrapolation of any one single quarter or extrapolation of one single year. If you look at the last 5 to 6 year performance of this company, probably you would have noticed a 13 to 14% sort of CC revenue CAGR with stable margins and, as I said, 30% plus sort of return ratios. So given the growth differential between, let's say, TCS and L&T Infotech is like 6-7 percentage points, almost 6-7 percentage points, return ratios being similar, I would not really, bother too much about paying the same multiple that I'm paying to the industry leader, which is TCS. So that is on L&T Infotech. And another point I would like to highlight is that FY21 has been a good year for the company, unlike most of the industry, which would have seen a decline or which would have seen flattish revenue. On top of that, the company should do industry-leading growth even in FY22, which in our belief is a very strong factor, because most of the companies who are talking about double-digit growth or industry-leading growth, we also have to keep in mind that their base is quite favorable in FY21. Either they would have reported flattish revenue or revenue decline. So on a 2-year CAGR basis, FY20 to FY22, if you see, L&T Infotech would have still outperformed the industry and most of its mid-cap peers. So we would not really be skeptical about paying the 30 times multiple that it is currently trading at. The other mid-cap name we prefer is Cyient. In this company, there are some unit level or micro level changes which are happening, which we believe will augur well in terms of the long-term turnaround of the company. As I started off in my initial remarks, the the turnaround in this company is a work in progress. Unlike Mindtree or Persistent, which have already executed it and shown it to investors, here it's more of a work in progress. And the multiples also give us that comfort that we can actually bet on that turnaround. There are interesting unit level changes in terms of focus on large deals, in terms of improving the sales productivity, so on and so forth.
Got that. Sudhir, actually, we are running out of time. We should have asked you the specific question first. Thank you very much indeed. We got your two ideas, Cyient and L&T Infotech. Thanks a lot for joining us. Have a nice day. A quick break and then we will have our